All right, what is going on, everybody? Hope you guys are having the best day of your entire life. Now, in this video, I'm gonna break down how I made $28,747 from my trading today. Now, there has been there were a lot of trades that I took. I'm gonna break down two of the best trades that I took. What because rest everything there's basically the same concepts that I used, but I'll break down my strategy and why I took those trades and what you can learn from these trades so you can do the same as well. Now stick till the end because this is going to be helpful. Now if you see me looking down, I'm looking at my iPad because I have my broker, or no broker actually, my trading what is it called, trading journal on my iPad sitting right here. So I'm looking at it so I know what time I got filled and where did I enter and everything. Okay, so all right, the first thing that I would love to break down before anything we start is time frames. All right, now I use different time frames for different times of the day. Now, if you have been watching my YouTube videos already, you already know this. If you haven't been watching my YouTube videos and this is the first time you're watching, hello, my name is Somesh. I've been trading 7 years. I make these YouTube videos because I want you to learn how to day trade from my free content, so you can start making money from my free content. And then if you want to actually level up even to the next level, you come, I'll just keep it real, you come join my trading program, actually get mentored from me, so I can actually teach you personally and get you to the next level. But YouTube videos can help you get started as well. All right, now time frames. There's different time frames that I use for different times of the day. Now I use 2 minute chart, 5 minute chart, and 10 minute chart. I change the charts based on the times on the day. All right, so what are the timing? 9:30 Eastern time to 10 a.m. Eastern time. I'm watching 2 minute chart, basically 30 minutes. Please, I don't want nobody asking me in my comment section, hey, I'm in the Pacific time zone. What would that be, bro? Just use your goddamn brain. Um, I use 2 minute chart from 9:30 Eastern time to 10 a.m. Eastern time for first 30 minutes. Then I use from 10 to 11 Eastern time. I use a 5 minute chart, and from 11 to basically about 3 p.m. I use 10 minute chart, and this is all Eastern time. 10 minute chart, and I do not trade. Hey bro, why don't you trade Power Hour? I heard that's where you make most amount of money. No, you don't. I have tried it. It doesn't work for me. If it works for you, good for you. But Power Hour or last 1 hour, whatever the crap it's called, it's not for me. I don't trade. So even if I have a position open, bro, I'm not joking. Even if I have a position open, I will close the position at 3 p.m. Just walk away. Done. Last 1 hour is not for me. All right, 2 minute, 5 minute, 10 minute. All clear, all done, sweet. Because this is going to be helpful as we move along in the video. All right. Now, how about if I'm in a trade and I took the play at 9:58 and I'm about to switch the time frame? Do you still switch the time frame to 5 minute? Yes, I do. The moment 10 a.m. hits, I am jumping to 5 minute chart. Okay, that's all clear. Sweet, time frame's done. All right, let's do this. Now, looking at this Tesla, when you look at this Tesla, what do you see? Like, just think about it for a minute. What do you see when you look at this Tesla? Okay, let's go candle by candle, shall we? All right, first candle opened, market went down. Okay, we broke below the pre-market low, market went down. Looked like bears were in control. What's bears? Bears means shorts. Shorts means basically when the prices are going down. Looks like bears are in control. They kept pushing down, and then came a point where the buyers went like, "Uh-oh, where are you going?" Look at this volume. Green candle has more volume than the previous red candle. They pushed the price up. Up until here, sweet. Bears could still be in control. You never know. But then we had such a huge candle. We literally went from low of the day to high of the day now. At this stage, I was like, okay, we already made a new high of the day. This can keep pushing. Like, this is a new high of the day. This can keep pushing. This is already a trend has picked up. Why? How do I know? We went from 415.7 all the way to 421.3. That's a decent move. Now, am I sort of a trader who sees this, who goes, oh my God, I'm missing out. Let me just buy something here. No, I don't do that crap. You know why? Because I know for a fact if I buy here, price is going to come down. I will sell here. And where I sell it will be the turning point. Market will go up, and then I will buy again here, and it'll come down. I'll sell, and this will happen over and over again. I have done that mistake, so I do not do that. All right, I rather buy at the pullback when the price is actually pulling back. Okay, so I'm still watching this, nothing really fancy, and the price made another leg up. I'm like, okay, we broke the 200 simple moving average. Okay, this is 200 simple moving average. So now to get this on your charts, go to your indicators, type moving average, a moving average simple. You need to click this once. A blue line will appear on your charts. The moment I want you to go to this blue line, okay, and mark 200, leave everything the same, okay. Style, change the style to orange. You see this? Orange solid line got covered. I'm just changing the color so you can see it. And then change it to actual cross, actual columns, no, whatever it is, circles, whatever it's called. And that's how I set it up, okay. Visibility, everything can stay the same. Make sure this thing is 200, and make sure the source is close. Sometimes it comes HLC3, nah, it just changes the values. HLC2 changes the values. Make sure it's close, okay. Super freaking important. All right, now this is clear, done. Now I'll delete that indicator from my chart. Now I have, because I already had it. All right, now what I'm doing is 200 simple moving average is one of those indicators that the prices can reject off it easy, or bounce off it easy. Now that the prices has gone. Now look at this. The prices were able to actually on a 2-minute chart close above the 200 simple moving average, which is significant. Now that doesn't mean I buy right here. No, I'm still waiting for a pullback. The prices are still going. When I say a pullback, I want to see some, bro, trading is simple, man. Trend, I want to see some sort of a pullback, somewhere that I can draw a flag, or somewhere that I can, see that, okay, this price is getting held. That means a little consolidation. Basically, consolidation is change of hands of buyers and sellers. People who wanted to sell, they sold. People who wanted to buy, they're getting in. It's a change of hands of buyers and sellers. So that means weak hands fall off, and people like me who were waiting, they jump in, and after a consolidation, you know what happens? A decent push can happen. That's what I'm looking for still. And then we got a little pullback. Okay, sweet. Now, am I buying the moment I see this? How do I know that it may not just want to keep coming down? No, I don't buy right here. What happens if I buy right here just because it came down a little bit? Oh, that's a pullback. And then it keeps coming down. Bro, I'm screwed. And it's Friday. This is Friday. You see what I'm saying? Now, here's the thing though. I am a 0 DTE king. I just got a Lambo and I put a 0 DTE plate on it. And the only reason I did that because I really, really love trading 0 days to expiration contracts, and I know how to trade 0 DTE expiration contracts. And one thing about 0 DTE expiration contracts, bro, if you buy at the wrong time, if you bought here and it made a little bit more pullback, you're going to be down like 30-40%. Period. So on a Friday, and especially when you're trading 0 DTE, which is 0 days to expiration contracts, you want to make sure that your fill prices or make sure your entries are the best. There's no room for error. When you're doing 0 days to expiration, there's no room for error. And the only reason I actually got this Lamborghini because I've got the number plate and I'm like, it doesn't look good on any other car. Let me just get a Lamborghini. I don't like the color as well, so why not? Anyway, I'm still waiting now. And then I saw another little pullback. Decent. But what's this showing you? When you look at this pullback, what is this pullback showing you? To me, what this pullback is showing me is, okay, we broke above the 200 simple moving average on a 2-minute chart. We broke above, then we came down, retested it, and now this is showing me that there might be some signs of bias. How do I know that? How do I know that there might be signs of some bias? The way that I know this is this was a huge red candle. Look at this. And the buyers were still interested in buying this and giving me a green candle. Now, this is called a candle psychology, and that's what's happening right here, right? And when I look at this, I'm like, okay, sweet. Now, I'm not just going to go out there and buy straight away. I'm like still waiting. I'm like, let me see on the next candle what happens. And on the next candle, it kind of still sitting in this same freaking zone. I'm just like, okay, okay, hey, it doesn't look too bad. And then I went and I drew my Fibonacci's from literally where the trend started to the top. So what's Fibonacci's? You go here, Fibonacci retracement, Fibonacci's, and these are my Fibonacci settings. Make sure they're exactly the same when you're actually setting them up. Okay, make sure they're exactly the same. Even if one little dot here changed, bro, nah, they ain't gonna make sense. All right, these are my Fibonacci settings. If you just want all the settings, sweet. And then I'm like, oh, I mean, we broke above and we are holding this 0.236 Fibonacci style from the starting of the trend to now. This looks good. And then there's a term called confluence. Now, what's confluence? Confluence means when there's more than one reason for us to jump into a trade. More than one reason. Now, here, one reason is 200 moving average, break, and a retest. Okay, that's one reason. Second reason is the fib level. Bro, we are holding 0.236 area really, really good. And those two red lines that you see on my Fibonacci's, a lot of people are going to be like, hey, Somesh, but 0.618 is the golden ratio. No, you're stupid. All right. That's the ICT concepts. And fuck ICT. I don't like, nah, bro. I don't like the guy's face. I don't like, bro, the way, nah, fuck it. I'm sorry if I offend anybody, but still, fuck ICT. Anyway, um, so that 0.61 imbalance, that, whatever crap. No, I watched 0.236 and 0.382. The reason why the strongest trends will bounce off 0.236. Trading gotta be simple, bro. The strongest will bounce off 0.236. Strong will bounce off 0.382. Anything after that, my grandmother can run faster, bro, and she's 90 plus. You see, the trend's gonna be so slow with options on it, 0 days to expiration. I don't want to get killed. I want to make some money, right? So I saw this confluence. Everything looks good. I decided, dude, this is the time for me to jump in. Now, where's gonna be the stop loss? I'm like, okay, if the price is able to close, below this Fibonacci, I'll jump out. Literally, period. And it came down a little bit more. No stress. Decided to go. All right. Now, where's my profit taking though? Now, if you look at, okay, these yellow lines on my charts, these yellow lines are lines that I draw using hourly chart. And every single day, I haven't missed a day in a long, long, long time. Every single day in my Discord with my students, I post my levels. Like you can see these levels, they're marked 426.87, 430. These are levels are marked on my charts every single day. I give them these levels before the market open, right? Anyway, so they know what levels I'm watching and why I'm watching and everything. Anyway, I was watching this, and I even said this to them in the pre-market, I said this to them. Look at this. And also I make a little video as well for them to actually understand what levels I'm watching and how I'm watching those. Anyway, I said I'm feeling good today. If the market came in my clutches today, I'm gonna make some cash. I'm letting you all know I feel ready. I just knew, I just knew that I'm feeling the zone because I slept well. I did everything that I needed to do. Whatever. That's how I made 28K. Right. Anyway, Tesla looked good. As soon as this yellow line hit, I'm gonna start taking profits. I'm in the trade now, and let's see what happens. Market chilled around for a little bit, and then 10 o'clock. On the next candle, it's 10 o'clock. So let's jump to 5-minute chart. I have a beautiful entry. Everything's looking good. Now, the moment it hits my first profit target, what am I doing? I'm taking some off. Thank you. I'm taking, what do I do in order to take my position off? So for example, if I have 20 contracts, I'll sell half at my next level. So literally I'll sell 10. And for the remainder half that I'm holding, my stop loss will become break even on the option contracts. This is called negative risk management, because what a lot of traders do is they do not know when to actually jump out. So basically every yellow line hits, I take 50% off. So I took 20 off here, I'll take 10 off here. This is 20 actually entry, my bad. 20 was the entry, I'll take 50% off. 10. The moment it hits the next yellow line, I'll take another 50% off this 10, which is 5. Now I'm still holding 5 contracts. Now where would I take these 5 contracts? Break even. boom. If the price is turned around, break even. Next yellow line, I'll take 3 off. Now I can't do 2.5 contracts, so I'll take 3 off. Then I'll take one off. If it's really, really trendy, I'll be able to catch the big move. That's how I trade, and that's called negative risk management. That means pretty much no risk to you. You're holding a runner, right? Anyway, took some profits and took some more profits. Beautiful. Now, what am I doing? I took 20 contracts, for example. Now, on this particular trade, my risk was not high. The reason my risk was not high, it just made a huge move, and I made decent amount of money. It made like a $7 move to 430. I made decent amount of money because even of a small position size, but my risk was not high. I think I was risking about 2,000, maybe not even. Let's say my position size was 4,000, and on a Friday, 50% stop losses can be really quick on option contracts. So let's say my risk was 2,000, and I made maybe about 6, 7, 8,000, 6,000, 7,000 of this because this trade went like 100 and something, 20, 30%, whatever. Beautiful, right? I took half off here, took another half off here, and then my stop loss got triggered because the prices started coming down, and then my stop loss or the break even got triggered, and I was out. Beautiful trade, right? Okay, this was SPY. Everything's good, because here's the thing. There's another concept that I want to break down. Once you're in a trade, this is your entry, and you feel un-okay about a trade, there's only 2 things that you can do. Only 2 things that you are allowed to do. Not you can do. There's only 2 things that you're allowed to do. Either you get out at stop loss, or you get out at TP1. Right? What's TP1? Take profit 1. Take profit 1 is the first yellow line. You're not allowed to do anything in the middle. So that means if you're entering here and you say, this is my stop loss and this is my profit target, and you entered here, prices are here, and you're like, oh my God, I don't know. No, shut the fuck up. Literally. Either stop loss, either the price comes down, hits a stop loss, or it goes here. Nowhere in the fucking between. I want you to be like, no, stop being a crybaby, yo. If you don't want to take the risk, then nobody's forcing you to fucking become a day trader. Go work at a normal job. You chose this life. So embrace the risk. Embrace that you try. Hey, some people, I'll say it, some people risk their money for the freedom. Some people risk their freedom for the money. Okay? Don't be that person who's risking their freedom, which is your time, 9 to 5, for money. You rather be risking your money for the freedom which it brings. You get my point? So once you're in a trade and the price is here, bro, literally, calm the fuck down. Either stop loss or TP1. Nowhere in between should you be like, oh my God, do you feel uncomfortable? Fucking that's good. You feel uncomfortable because you're meant to feel uncomfortable. Doesn't matter how long you've been trading, you always gonna feel uncomfortable. And people who say trade without emotions, they have no fucking idea, because I've been trading 7 years, I made millions of dollars from the stock market, and I still feel sometimes emotional. You know why? Because there's money on the line. And the people who do not feel emotional are the people who trade paper fucking literally simulated accounts. And they talk about, oh, you don't need to have emotions. Bro, what the fuck are you talking about? I have $50,000 on this fucking trade, and you telling me that don't have emotions?
It's 2 hours.
I'm not Elon Musk yet, where 50,000 doesn't have emotions. He's worth 450 billion. I gotta have emotions. Period. But the thing is, I literally tell myself, okay, nobody's forcing me to do this. I chose this. So another thing that I'm gonna choose is either where my entry is either hits my stop loss or it hits my TP1. Nowhere in between do I need to go out there and be like, oh my God, let me just try to be extra smart. No. All right, done. Sorry I got carried away, but just really, really wanted to break this point down. All right. Let's talk about SPY trade, and this is cool. All right, now talking about SPY trade, yo, and by the way, if you like my teaching style, if you like my trading style, keeping it simple, you know what you're gonna really benefit from? You're gonna really, really benefit from my mentorship, KCU program. Okay, it's an invite-only program. Fill out this form. There will be a link somewhere here or here. Okay, I'll look like I'm trying to flex my muscles. There'll be a link here. Click this link, and it'll take you 10 seconds, 20, or maybe 30 seconds, maybe 2 minutes. Who cares? Fill out the form, and the link will be in description as well. But yeah, let's get back because I feel so uncomfortable. I'd rather be little, because I'm an introvert, man. I'm a day trade. All I do is press buttons. I mean, I don't like people looking at me that close. Like you checking me out, you're like, oh, that's a sexy guy, uh, bro. Let's go. Let's have a look at Spy. What did I do on Spy? Now, Spy had a very, very interesting chart. Spy actually opened above 200 simple moving average on a 2 minute, on a 5 minute chart. I was trading, of course. Yes, I was watching 2 minute chart. I'll just keep it real. I was watching 2 minute chart. It opened above the 200 moving average on a 2 minute chart as well, and prices went up. Sweet. At the moment 10 o'clock hit, you know what I'm doing. 10 o'clock's about to hit. I'm jumping on a 5 minute chart. So I was on a 5 minute chart at this stage, and up until this stage, everything was choppy. And now the moment we broke below 200 moving average on Spy on a 5 minute chart, I was like, okay, let's see if we get a pullback. Same stuff that I did on Tesla, yo. It broke above the 200 moving average on a 2 minute chart. I waited for a pullback. Same shit that I did here. I'm like, let's see if we get a pullback. But it made a significant drop, and I didn't get a pullback. Now 605 right here. 605 was my hourly level. Do you see it? Do you see it? 605 was my hourly level, and it bounced off it really, really heavy, right? And that was my level. So that means the level is actually solid. That's why we bounced off. Now it went and retested the 200 simple moving average. Now there's a lot of confluence here, yo. I want you to remember confluence. Now there's so much confluence. Look at this. There's 200 moving average right here. This is 200 moving average. This right here, this red line running across, this is range of the first 15 minute. It's also called ORB. Basically, pretty much first 15 minutes, 1, 2, 3, 5, 5 minute candles mark the lows and the highs of the time frame, and that becomes the line. And then this green line is 8 exponential moving average running there, and the 606 area is a hourly level. Bro, you have so many freaking reasons, and then there's so many freaking reasons for you to jump into this trade. And also there actually is a pre-market low as well. Oh my god, there's so many reasons. Now, I'm not gonna say oh, look at me, I'm so smart. I actually didn't get in here the moment I saw, because I'll be super real. How do you know that you're gonna reject here and not just keep on going? I rather pay a little bit extra for the contract, but but have peace of mind. So I waited for this candle to close. The moment this candle closed, I'm like, okay, clearly it's bearish. Clearly it's bearish. It got rejected off all that critical level, and now I jumped into trade. Boom. Now 605 was the area. Now a lot of buyers kept showing up around the 605. Look at this. They kept buying over and over again. Over and over again. It kept pushing up. It was not able to break below 605. Now, you know why 605 was such a critical level and price was not able to break below? Think about it as a solid area of buyers. Okay, I want you to kind of picture this as a. Let me give you an example. Hang on. What's this paperwork sitting on my desk? Okay, we use this paperwork. Okay. I want you to think of it like a paper. Okay, there's multiple layers of this paper now. Okay, if you try to fall on this paper, would you go through? Look at this. Would you fall through? No. Would you fall through? No. We're not able to fall through. But if you keep jumping on it over and over again, what's gonna happen? You keep going over and over again. Now, why are the prices bouncing here? Why are the prices bouncing at this stage? You know why the prices are bouncing there? I'll tell you. Because there are buyers sitting there, and that's why the prices are not actually able to break above. You get my point? Because the buyers are like, no, I'm not letting you go. Why? Because it's buyers who push the price. So that means somebody out there sitting on the other side of the world is buying consistently, and he's the piece of paper that's not letting us go through. But sellers wanna push through, right? The sellers are like, bro, what are you doing? get aside. And if you are a buyer and you want to buy an iPhone, would you buy it at $1,000, or would you buy if you know that 5 minutes later it can be a 900? You'd be like, okay, I'll buy a 900. So eventually comes a stage, either it can be that, or eventually comes to a stage where you can only buy so many iPhones. You're like 1,000, you can buy only so many. And after that, you're out of cash. That means you don't have any more money to keep buying. So then the prices will fall. If somebody's sitting there and they're like, nah, I won't let the price go, eventually they're gonna run out of the ammunition, right? So what happens? The prices fall below. Fuck, I wouldn't go through the bloody paper now. So I can break. Man, oh I needed this. Oh my god, I needed this piece of paper. Man, you see the sort of stuff that I do for you guys. I needed this piece of paper. God damn, it's a letter from my taxation department. Oh my god. Anyway, look at this. Anyway, came to a stage where the buyers, boom, they went through. You get my point? Boom. Because, hey, all these people, the one that I actually keep buying and buying over and over again, and for 15 minutes they kept more than 15, 5, 10, 15, 20, 25 minutes they kept holding the price. So I was like, literally, I said to my students in the chat, they were watching my screen in the real time. Especially now, again, if you're a member of KCU, you actually watch my screens in the real time while I'm trading. So I explain this stuff in the real time. And I was like, guys, if this goes through, you're going to make such a nice, sexy move towards the downside. Ooh la la, this is going to be good. And you know what happened? Bam, 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 bam. Look at the volume. What happened? Though that buyer got filled. The people who kept buying, they don't have any more money. And then the sellers are like, all right, let's freaking do this. And prices fell. Now, what did I do? Yes, I took some profits here. Hey, I had to do it. You see what I'm saying? I traded SPY puts. I had maybe about 140 puts of SPY. I had SPX puts roughly about around here. I got an SPX puts as well. Just because 200 simple moving average on the hourly chart was sitting right there, right here. And the 5-minute chart that we were watching went back, retested the area. I'm like, okay, let me just jump in. This small size SPX put. When I say small size, 10 contracts, and those 10 contracts went up by because it's 0 days to expiration, literally doubled in money in like fucking 10 minutes. Beautiful. Beautiful. And I had actually had a couple 10 of one strike. Yeah, I had 10 of one strike and then 10 of another strike. Bro, whatever. Took some profits here, and then had some profits at the bottom. But I legit, actually, not gonna lie, I exited the moment it started to go up from right here. I actually like, nah, fuck, I'm all out. I didn't wait till the last minute, and the 603 was a level on my chart, and I was like, I'm done for the day. And you might be like, yeah, you saying it, the 60, this is like, bro, because I'm from Australia, and right now, like, it's already Sunday, you see, it's already Sunday for me, 2 a.m. in the morning, Sunday, and for you guys, it might be Saturday, 11:10 Saturday. So anyway, SPY, that's why the market opened, you see it, you might be like, oh, why is the prices, well, why is the market at 11:15? No. SPY levels 604, 603, 603.64 and 603, and my levels are pretty freaking accurate. They usually are pretty accurate, and look at that, where the price is bounced. It bounced at 603.2 was the level that I had, 603.3. 1 cent off, but you get the point. That was the trades. All right, sweet. That's it. That's all I have. I hope you learned something beneficial. I hope this was well worth your time. And I'm super proud of you for actually putting in time to learn the skill set that not just going to benefit you, but also going to benefit your family. And I freaking love it. You rather could be watching Netflix, but you chose to watch this video so you can learn how to trade and actually give your family the life that they deserve. So I know you don't hear it that often. I know not a lot of people tell you that often, but I've never met you, I've never seen your face, I've never actually, you know, had a drink with you, but I'm rooting for your success. I'm fucking proud of you. Keep freaking going. Keep pushing. I believe in you, bro. All right, you got this. And if you want to watch more of the videos like this one, there will be a probably playlist somewhere here. If you want to learn from me, there'll be a link here. And subscribe to the channel. I'll see you later. Peace. Goodbye. Much love.